Typically, we have Bitcoin pullbacks during a bull market within the 30 to 40% range. And we have multiple of those, right? But I'm going to go over 2 reasons why we might not experience these 30 to 40% pullbacks anymore. But I got a couple interesting articles right now that are going to make you really bullish. But right now we have $1.2 trillion spending bill, over 1,000 pages long for U.S. citizens, released at 2 a.m. today or yesterday. Just got approved now, 10 hours later. So do you really think they read over 1,000 pages? Of course not. But here's the kicker here, is that we just had $1.2 trillion. Pretty much is going to be printed out of thin air. Now, I went back to a Mike Maloney video on goldsilver.com, and what he pointed out was the first 200 years of the United States, from the inception for 200 years afterwards, there was about $850 billion printed over a 200-year period. And over the past couple decades, we've printed over $34 trillion. That's just ridiculous. It's got to keep going further and further. Let's go over to a tweet done by the Kobisi Letter on Twitter. They say it hasn't been 3 full months yet in 2024, and the total U.S. debt is already up $600 billion. As part of the debt ceiling passed in June 2023, the debt ceiling remains uncapped, which means sky's the limit, for the entire 2024. Total U.S. debt is now a record $34.6 trillion, and now we are on track to hit $35 trillion by June. Okay, so check out this graph of the total public debt outstanding. Look at this chart. Guys, this is unsustainable in the long run. But right now, we are going to experience a crazy amount of currency printing like you've never seen before. I know I say this over and over again, but you're going to have to watch out with inflation. And we can judge inflation by the price of Bitcoin. Why? Well, let me go over this. Since 2012, back in 2012, for a medium U.S. home price, it would have cost 50,616 Bitcoin. 2013, 19,000 Bitcoin. 2014, 351 Bitcoin. And now going over to 2024, 8 Bitcoin. The amount of Bitcoin that it took to buy a house went from 50,616 to 8. That is crazy amount of inflation, guys. And a lot of people understand how dangerous this is. Let me go over this wallet just yesterday. Over 25,000 Bitcoin valued at approximately $1.6 billion were transferred to accumulation addresses, making the highest inflow to these Bitcoin wallets so far this year. What's an accumulation address? Address that doesn't sell. It holds. So this is really, really bullish. Somebody that bought $1.6 trillion or $1 billion worth, they know what they're doing. They know what's happening. Now, what else is happening right now? If you're part of the EU, not the best news, but I'm going to give you, there's a catch here. Okay, so breaking. Europe has made self-custody crypto wallets illegal due to anti-money laundering laws. So they made it illegal. But there's a big difference between actually banning something and enforcing something. They can't ban it. They can't enforce this, all right? It's impossible. This is a scare tactic for people to go, okay, yeah, here's my information, blah, blah, blah. The smart people are going to be like, screw that, I'm not going to do that. So anyways, that's just a scare tactic. Don't be scared by these stupid governments. They don't know what they're talking about. So lastly, let's go over 2 reasons why this Bitcoin bull market will probably not have the more major pullbacks like we've experienced in the past, up to 40%. So this is from Satoshi Flipper. On Twitter, he says, in the 2017 bull cycle, the Bitcoin corrections along the way to the blow-off top went as deep as 40%. the 2021 bull cycle, the Bitcoin corrections along the way to the blow off top went as deep as 30%. So 10% cheaper or 10% less. And the current bull cycle, I'm going to anticipate approximately 20% for Bitcoin corrections. Makes sense that the market is more mature and the corrections won't be as deep this time around. Kind of disagree a little bit that I think we will see a 30% price decline because there is going to be a lot of retail in this space, and I think BlackRock and friends are going to allow it to just kind of go down when they panic, because a lot of people, first off, are very leveraged in this space, especially when we start going up crazy amounts. So say, for instance, we went up to $120,000. I mean, we could go back down to $70,000. Who knows? And then skyrocket to $150,000. I don't know, but that could potentially happen. So my suggestion is potentially just taking profits, dollar cost average out on the way up. That's probably the best way. And if you want to see how we are going to do this, we are going to do step-by-step how to do this at learningcrypto.com, home of the CT Club. That is where we teach people how to get out of the market when we view it as close to the top. And also you get access to our portfolio and much more. Anyways, that's all I have. Please like and subscribe. Stay disobedient. Bye-bye.